Let's talk about a couple of things that a loan officer or a realtor will never tell you. Over the last few days, I've been talking to people that need to get cash out refinances, and they want cash out refinances to consolidate debt that they did not have when they bought their house 12 months ago, 18 months ago, or 24 months ago. So let's talk about what you can do to avoid this situation happening to you. One, do not buy a house based on your salary today, knowing good and well that you are going to retire in the next 6 months, 12 months, 18 months, 24 months. Your income when you retire is likely to be drastically lower than your income while you are currently working. Yes, we are going to try to max you out because you're earning more, but we ain't the ones that got to make them payments. You are. So choose wisely. Car debt. You do not want to be in a situation where you have maxed out your housing debt and then turn around and try and get a car. See, the difference between us and them, they ain't going to stop you. They're not going to save you from yourself, which is why we say buy the house first, then get the car. But if you're going to do that, do so responsibly. You know if you want to buy a car. You know if you need to get a car in the next 6 months or 12 months. So does it really make sense for you to have a 54% debt to income ratio, close on the house, and then turn right around and get an $800 a month car payment? And then on top of that $800 a month car payment, your husband get a $900 a month car payment. Just examples. I'm just saying 10 out of 10 don't recommend, but y'all grown, do what you want to do. This is just a cautionary tale. I just don't want people to end up in some of the scenarios that I've been hearing. Quitting your job, reducing your income, going out and buying 1 or 2 cars that total $1,700 a month in car payments is probably not the most ideal circumstance if you couldn't have carried that $1,700 a month car payment to be able to get the house. So now that you've done it the opposite way, you got the house, you feel like you can afford it, you go and you get the car. The car people, they're not going to save you from yourself. They're going to encourage you. They're going to high five you all the way to bankruptcy. So do what you're going to do, but you ain't got to listen to me. Just know that it's not your realtor's fault. It's not your loan officer's fault. And quite frankly, we're probably not going to caution you to not do these things. So take this as a message on behalf of the industry. That's probably not the best idea. Do your math, know where you stand before you go out and you acquire new debt after you've closed on your home.